All right, guys. Thanks everyone for dialing in. We had a little bit of tech issues in the back, so sorry for being a few minutes late. The latest episode in the Syndicate Webinar Series, this is all about the membership. So we're going to spend the first half talking about how each of you find investors, so how you're, finding members for the syndicate, and then also, raising for deals. And then second half is it's all about the ongoing management for these members of the syndicate. So yeah, and then we've got Oliver once again. Thanks for joining us as you're the co-host for this series. We've also got the two Davids, and there's another Oliver imposter there, but ignore that one. But love for you to each give a brief intro on yourselves. Oliver, do you want to do a quick one? People have seen you here before, but good to remind them. And then we'll go on to David Speese and then David Silva.
Sure, happy to do so. So my name is Oliver. I'm based out of Denmark. I run a syndicate or investment firm called Hersir Ventures, where I do deal-by-deal syndicates, mostly in the Nordics, but also across Europe in early stage venture. So it's pre-seed, seed to Series A, ticket size anywhere between 50K to 500K. I have, in the last 12 to 15 months, done 8 investments with around 50 investors, and I've only used Mara so far as a privy provider from a warm recommendation from euvc Andreas back in the days. So thank you for that. Happy to be here.
Thanks, Oliver. Mr. Speese.
Hey, Sasha. Thanks for the invitation. Happy to be here. Good to see Oliver and David as well. From my side, I'm standing, actually, in Berlin. I am a co-founder of a syndicate called Xaura Ventures, where we are made up of 70 members or so from almost 30 countries. Each one of the members are graduates from the full-time MBA program at IESE Business School, which is based in Barcelona. We've been operational for about 12 months, working with Mara the entire time. And we have done soon to be 6 investments totaling a little bit more than $2.5 million in our first operational year. We are agnostic about the opportunities, so we can invest into early stage opportunities as well as later stage and fund investments. But yeah, happy to be here. Thanks, guys.
That's Mr. Silva.
It's been a long time since I've been referred to as Mr. Silva. Thanks, Sasha, for that. I appreciate it. Hi, Oliver. Hi, David. Hi, everyone. Nice being here. I'm also standing, as my homonymous David is here in Lisbon, Portugal, where I'm from. It'd be nice to see where people are. So if I don't know if can they chat with us, Sasha? Are people able to put stuff in the chat?
Yeah, sure. We can take questions, and we'll be reading
Yeah.
those out throughout the webinar.
Please tell us where you're based as well. It's kind of cool to see where everyone is. I'm one of the 2 founders of euvc. Oliver was kind enough to name my co-founder. We're a media company. We behind our media company, we run a small scale syndicate where we do some investments. We've been doing it for almost 3 years now. We have kind of a unique flavor, which is we do LP tickets mostly, so we invest mostly into funds. We've deployed close to 10 million so far, so quite a nice number actually. Just checked it. And we've started before Mara existed, so we've used many providers, but we now actually use solely Mara. We're very happy with that. I'm happy to talk about well, I don't want to promote Mara, but kind of what matters to syndicates when we're looking for providers. I think that's a big one, and many people I know spend too many hours working on that one. So if we can be helpful on that front, I think all of us will have some feedback. So yeah, happy to be here, happy to talk about whatever. And again, please share some information about you in the chat so we get a feel for the audience, so we're not talking to the void. Thanks for the invite, Sasha.
Thanks so much, guys, and thanks for the mini plugs. I want to invite you, David Silver, first, because we're reading a lot about content as a distribution strategy for business generally. And I think very much your syndicate is based on the newsletter and video content which you guys are pushing out. I'd love to kind of hear about how you built the syndicate initially around getting eyes on your newsletter. how you grew it, and then second half we'll of course talk about management, but maybe that initial setup. I'd love to hear a bit about that.
Feel almost like it's a bit unfair because it doesn't really apply to most people. But as you said, we started with a content machine first, right? So we're doing podcasts, newsletters, and so on. And obviously, a concern, and I think we cannot not cover this. Like a concern for many people running syndicates is how can you be fully compliant whilst fundraising, right? It is a big concern. And so our take, well, we had the reach, we wanted to be fully compliant. So the way we managed it was we spoke about the deals we made. So it was a bit retroactive. So when you see like the first generation of our investments was very network driven. So people we knew personally, we called them, it was not really content, even though people think that's the way we started it. The first generation was really our networks, our personal networks. And then by talking about the deals we had done, that invited people to come and reach out. And that was kind of the second wave of memberships. I think there's many different flavors and ways to do this. We have our own flavor. We don't want to have a big group of people behind us that aren't active. And so we've now taken an approach where people are welcome to join us, but if they're not active, we remove them from the syndicate after some time. There's other players, quite some US players that do quite a different approach. They like those big numbers, and they use those big numbers also as a way to kind of drive FOMO, and also kind of they try to create like paid tiers inside of the syndicate, so on and so forth, which I think is awesome. It's just not our flavor. So for us, it's been very, it was network first, and then after that, it was just talking about the deals that we've made in the past. Not so much about traditional fundraising. With closed networks, it's easier to do that. But I think David Speese has a very different perspective here, which is actually additive to it.
Yeah, I think so. And we kind of, approached our syndicate from like a problem solution. So kind of in an entrepreneurial way, right? So maybe to give some background, I started working at a venture firm called Tiburon that was in Munich. And, I discovered quickly that I had access to some really interesting private market opportunities, so mostly early stage. And I looked around my network, and I realized that within the network of the MBA program, which I was attending, many individuals were interested in investing into, early stage private market opportunities, but they didn't actually have the access, right? So for us, it was super clear to, to find, like, we defined this problem very early, that having access to good early stage private market deals is super rare. The problem there isn't capital; it's purely access. And so that really turned into very quickly something interesting for the community that I was in. A group of people from the age of 25 to 35, all of whom kind of had access to capital, but they didn't have access to the deals. And so we were able to really organically build a community quickly of people who said, "Hey, I'm really interested in seeing these type of opportunities." And that was before we even invested in a single one. So we were able to, quickly gain, 20 members or so before we did our first deal. And then after we did our first deal, right, it was the word quickly spread within this closed community, just like you mentioned, David Silva, that, we actually are, initiating investments into really interesting opportunities. And it's kind of been a flywheel since then. Is that like, look, we're giving access to these opportunities at kind of lower ticket amounts, and it's really hitting a pain point that most people have, is they want to invest into early stage companies, and they just simply don't have the access. And if they do, typically the amount that you need is much higher than they're willing to invest for the first time. So yeah, I would say kind of to summarize, Xaura, we looked at it as entrepreneurs, right, as a problem solution model.
Got it. Oliver, how about you? Some insights from when you were first building your syndicate in Hersir?
Yeah, so I maybe have a little bit different approach. So I was part of another syndicate where we like a close group of 10 investors, where we did like 23 investments across the Nordics and Europe. Saw and learned all the things that I liked and did not like with that kind of setup. So I sought out to make my own. Basically, I just started with my own closed network, there was not there was a lot of interesting people there, but not necessarily actively investing through SPVs and such in syndicates. But gradually started doing that with a few small deals, and then I think my third deal I came across kind of like a hack, and that was actually also inviting the founders network to co-invest into the SPV. So basically offering the founder to have all their family, friends, and whatever that wants to invest smaller tickets to go through the SPV as well. And that actually and ultimately ended up being that more or less every deal since 50 to 80% is actually the founder's own network. So that's like how I ended up building my flywheel, that I meet people through the founders and I cross-pollinate networks with the founder. And yeah, I'm also trying to stay compliant, so I don't advertise, I don't actively seek out people or anything like that. I basically, if people ask what I do, I share what I do, and then people will kind of like sign up to see if there's anything interesting for them. So I have a very spread out network with a lot of interesting people, but I also really curate my stuff, so everybody doesn't see everything. I try to select the right people in the syndicate for the right deals. So sometimes it's difficult in that approach, but I think it's about matching quality with the right people and not just spamming them with a lot of stuff and getting anybody on board that's willing to invest. So that's like, a little bit of different approach.
Okay, so that's in terms of selecting. David, Silva, do you filter out investors? I mean, because some of the funds we help you invest in, some are restricted to professional investors, for example. Like, do you have an approach of filtering by suitability or by other means?
Yeah, for sure. There's different layers, right? So we filter. I think Oliver kind of mentioned this very briefly. It's very easy in syndicates, especially as they grow, to have inactive members, which is kind of annoying for everyone involved, to be frank. So that's filter one, right? Just kind of, are you an active investor? And for us, activity can be investment, but can also just be like adding value in whatever way. Like everyone has their own flavor. Some people help sourcing deals, some people help attract other members, and they're like they don't have the cash flow during a year or whatever, right? And that's fine by us. Like we don't think that's a problem. For us, a problem is people who are really not active in any way. And then, as you said, yes, then in our case, each deal has kind of its own kind of flavor and its own limitations at time. And that, like, we make it hard to become a syndicate member in terms of like how much information we ask of you and the amount of documentation we ask you to sign. It's a bit annoying, but it allows us to be compliant first, but it also allows us to have that information, right? So if we're working with a fund where the minimum ticket that we can accept for the underlying investors is higher, I have that information at hand. And again, to Oliver's point, I'm not blasting everyone with a deal that doesn't fit 80% of them. I'm blasting everyone whose ticket kind of matches the ticket that we need, or whose knowledge kind of matches the knowledge that we need. And this was probably one of our learnings over the last year and a half, maybe 2 years, was like really nailing that segmentation, right? We're better, we're not perfect yet, but we're learning. But that's really important because what we were seeing is like, as we were doing a lot of deals, now we're doing a bit less deals. We're doing like 3 to 4 deals per year, but there's a time where we're doing much more. It was like just making sure we're not spamming our investors, and so understanding like, hey, this girl is more interested in this type of deal, like early stage Eastern Europe, whilst that guy is more interested in later stage or secondary deals, right? That kind of information, like, it has proven to be like very useful that we're tracking, just to be more relevant when you reach out. Yeah.
Got it. How about you, David Speese? I guess the criteria is pretty simple. Are you ESA alumni or not? But are there any other filters you apply?
Yeah, of course. I think that we are trying to grow, a pretty grassroots community that each individual, has the one ability to invest. I think that's really important. Also, we have them kind of sign over that they are professional investors. We also have other criteria that they are interested in private markets, whether they are working in a family business or a family office or at a venture firm, and have interest in also contributing to the community in one way, shape, or form, right? Because this is kind of we might be creeping into one of the next topics here, but we operate in a community that people can talk to each other, right? They can reach out to each other. That's kind of like the goal of our community, is that we want, I think Oliver used the term cross-pollination, but we want, our investors to start working together, our investors start investing in other things together, right? We want our community to be in general value add, not just with the investment deals that we are proposing, but with the links in the community that you can kind of create over time. Because, within an MBA program, each year there's about 400 people. And most of the time you don't really meet other individuals above or below you, particularly 5 years above or below you. And so we're kind of creating a really curated community within the SA world, where individuals who are very interested in either working, investing in private markets can connect to each other. And so for that way, that's the gating, is that you have the capacity to invest and you're interested in investing and you want to be part of a community in this way. And so we have an interview process where the partners of the fund actually, interview these individuals. Is that the most scalable thing in the world? No, but we're also not trying to build a community of 10,000 people. So I think that's the profile of our syndicate moving forward. And there's many different flavors, but for now it works for us.
David, can I ask you a question, by the way? Because it's kind of interesting. Yeah. How are you thinking around educating and helping your syndicate members? It's a topic we've spent a lot of time thinking about. I'm curious to hear your take.
So we've started this year already, because again, we've only been operational for 12 months. So as of March of last year, we made our first investment. And something we've been asked about from many members is, hey, I'm sure you interact with professionals who are doing this, more than you guys. Can we talk to them? And the answer is absolutely. For example, we've done our first 2 later stage transactions. And so within our network, we brought in, a professional later stage investor to basically do a Chatham House Rules webinar about, what later stage investing has looked like since he started 15 years ago. So we're kind of bringing in maybe professionals who might have a little bit more experience than us, that we're relying on, right, to kind of bring that knowledge directly to the members. And we're positioning it as, hey, look, this isn't something that's going to the entire community as a whole. This is really, focused on you guys and all of the individuals in the community. So I think we're using professionals who are willing to work with us to do that. That's one way.
Okay. Are you guys filtering out by investment size at all, or are you sort of pretty flexible on minimum investment size?
Yeah, we're pretty flexible. I mean, obviously the minimum is not going to be €1, but typically our minimum investment tickets are 5,000 to 10,000 euros, depending on the opportunity. That's what it's been so far. And as I mentioned, we kind of do some gatekeeping at the beginning to ensure that the individuals have the capacity to, allocate some of their portfolio to early stage, very risky investments. But again, I think a minimum of 5,000 to 10,000 is reasonable for kind of what we're asking.
I think whenever I engage with investors directly, I dissuade them from investing because I'm so adamant about how much, first, about the amount of deals you should be making on a yearly basis, and the amount that wealth should represent to your total wealth. So I think I'm a very bad marketeer of my own syndicate in a way. But we don't necessarily care about minimum tickets. There's of course regulatory considerations around it. Now I think it's important to mention that syndicates are great ways for angels to get started and for VCs to get started as well. So typically you see an angel gets started by investing into a syndicate, and a VC can get started by running a syndicate. And so we've tried to kind of stay true to that philosophy and be really open. Thus my point before about some investors can't really do a lot of tickets, or can do only really small tickets, but are willing to put in the time to help, right? Either by connecting us to other investors, trying to help with DD or finding opportunities. And I love doing that. I think it's one of the cool things about running a syndicate that you can do. Unfortunately, it's super time consuming and we can't do a lot of it. But I do think it's important to mention, like, if you're running a syndicate, there's many ways to create community, and I think this is one of the strongest ones, which is like, can you help people in their professional development as an investor? And if you can, I think then you're really becoming additive, right, as a syndicate. So that's kind of my take. Unfortunately, it's not something we can do that much, but I think the few times we've done it, we've seen it yield results. Even from a financial perspective, because these guys or girls can bring other investors, and oftentimes that they bring in much more capital than they can actually deploy, which is always exciting as a syndicate lead.
I totally agree with you, David, that having this community approach allows you to enable people to kind of achieve their goals, right? Again, like, all of the members within our community are interested in private markets, and many of them want to work in VC or PE or in some investment fund in some way, shape, or form. And they're at a juncture in their career where they can say, hey, look, I made my first private market investments via this syndicate, and then they can use that to kind of help launch themselves professionally, whether it's applying for jobs or whether it's kind of running their own thing. So I totally want to echo your sentiments about that. It can be really valuable for individuals who want to kind of launch themselves into the private markets, for sure.
I can add a little flavor to that, because I actually have a very different approach. I tend not to have my community communicate with each other, only the ones that have like doing a deal together. So I am more on a one-by-one basis, like even less scalable, meaning that I meet with every single syndicate member, tell them my values and how I want to manage this PV. And of course, say if that's not for you, that's fine. That's up to them themselves. But actually trying to position myself to become if they're interested, being their mentor in private investing. So basically saying, as you said, this is the great way to start building your career, start building a track record, and I want to be the person that they could do it together with. I've also offered people part of my syndicate, if they want to do any work as an investor, whatever, they're more than welcome to join me and do deals and whatever, but not as a big fluffy community. It's more like a one-on-one basis. Another thing that I also do that might be a little bit different is that I actually want to work quite close with the founders that I do work with, and also let them approve every single syndicate member that's investing in a deal. And if there's somebody they don't like, or they're affiliated to a competitor or from a different fund and so on, I always follow the wishes of the founder, which I think is again, it's a different product than many others, but I think it's just super important to be aligned on that.
I think you raised two really important notes, Oliver. So first one, I mentioned community and I brought up that word, but I actually completely agree with you. So we only allow our members to communicate, as you said, around the deal, right? So like even WhatsApp, we don't love WhatsApp groups, by the way, but the few WhatsApp groups that we do have, it's around the deal, right? It's not like you become a syndicate member, you can engage with everyone. We actually don't have that. So we actually really share that view. But as you said, on that one-to-one interaction between me or someone in my team and the individual investor, that's where I think that value lies, as I was commenting before. And then to your second point, I think that's a super important one, and that I think that's one of the big challenges with running syndicates, which is, as you said, do you want to whitelist every single investor for each opportunity with the investee? Yes, no. And then also importantly, which you didn't mention, but I'm sure you have a lot of views around, which is like, okay, post-investment, how do you manage information sharing? Because that's where, exactly as you said, if you had a competitor investing as an example, right, that's where it becomes problematic. I think that one's a really tough one that I see most syndicate leads struggling with to some extent, of what the approach is. We've actually tested it. We've tried different approaches. We've tried the approach where we validate with the investee, where we don't validate with the investee. Pros and cons. It's really hard to come to a decision there. But I'd love to hear your thoughts as well on that one, like post investment.
Yeah, so the advantage is that I run through every single syndicate member that's investing together with the founder, and I also align with the founder, like how do I act post investment, and basically I do share all insights and all investor updates that I do get from the founder to the syndicate. I feel I need to be able to be confidential with the ones part of the investment. So, and for me, and it's also again different kind of style. I operate with what I call extreme transparency. So I also let them know who's part of it. I show them my calculations, my fees, my everything, whatever they want to know, I share. Right. I don't want them to. I'm not trying to gatekeep a secret way of doing stuff. I even say if you want to do it yourself, I'm more than happy to educate you. For me, it's about having more people empowered to do it than keeping it like a secret of how to run it. I'm not saying I'm the best one at running it, but at least I want to be open and share it. And because I think at the end of the day, it's all about being able to build founder connections and get access to the best deals. And the more investors investing into SPVs through syndicates, the better. So yeah, I'm quite transparent and open with these things.
Okay. In terms of like just before we move on to managing the active membership, do you find new members coming mostly from like a new deal which you're presenting, or is that just from your own efforts in finding new members?
I need to echo what Oliver said. I didn't mention it, but it is a huge growth engine of investors is the network of the investee, right? Which we're also doing, right? As you know, Sasha. And that is actually the biggest engine of growth in our member base. So to those that joined a bit later and didn't hear Oliver saying, he was sharing, and we do the exact same thing whenever we're doing an investment. We invite, if it's a founder, that founder's network. If it's a VC, that VC's network, to join on the deal as well. In our case, we waive most of our fees. That's how we make that deal also interesting, to be frank. So that for our network, we charge more fees. Well, that's, our work of going in and finding a deal. But if it comes from the investee side, it's more like, hey, you're bringing kind of your guys and girls into our deal, so we'll waive the fees as much as possible. And that has been, even though we're a media company, even though like reach is super high for us, blah, blah, all of that crazy stuff, that's probably 80% of our growth, maybe 70%, something like that.
Yeah, I'd love to echo that as well, David and Oliver. It also goes to show if you have something competitive, if you have access to a really interesting deal, people talk to their friends about it. They want to say, hey, we have a good example, right? We were able to invest in Anthropic, which we were super happy about as it was a very competitive deal. And we had a number of other new investors come into this purely because they were told about it, because the person who invested wanted to brag about it to their friends. And so it's, that's the best free marketing you can ever have. Obviously those individuals will, they're subject to the exact same qualifications that you would need to invest in the deal with us, but still, I mean, we're very happy to have referrals. And one other piece would be also collaboration between syndicates. I've found that for the last few deals that we've actually collaborated with a couple of other syndicates in the Mara universe, which has been really exciting. And especially when you're kind of getting off the ground with, building up a syndicate, sometimes hitting the ticket size that you committed to is a little bit difficult, right? And that's a very stressful period. And you can kind of, it seems to be a win-win for all the syndicates involved, especially if everyone is growing, that the amount that you need to commit from your syndicate's a little bit lower. You have shared economics. Everybody's happy, typically. So that's been a really cool learning for us over the past 3 deals, is that actually you can, collaboration, just like in startups, is super welcome, and it's very helpful to kind of help everybody, across the finish line on closing deals.
Okay.
It's funny you say that, David, because for us, like, I don't disagree, but like our hottest deals, I can't accept new investors.
Yeah.
It's almost like I almost want to say, like, if you're an active investor with us, that means kind of you're paying access to the hot deals in a way, right? Because I'll think of you first.
Yeah.
Like if I look at the last hot deals we had or whatever, like all of them were oversubscribed. Like I had to fight for the allocation. I got like brought down on the allocation of the investee side, and then I
Yeah.
had to pick which investors, and I was like, well, do I pick pro rata based on commitment, or do I actually pick pro rata based on past commitments? And I think the latter is like actually kind of cool because I'm giving, like, if you're a loyal investor with me, I'm giving you more, right? And I wanna how to say it nicely, like I want to promote that behavior. I want to promote that you invest repeatedly with me across multiple deals. So it's kind of a tough one, and it's a kind of a little pain point we've had. Like when these deals come, they're normally super quick. I wish I could like have like a month to talk about it and everyone would know about it and I'd get like 100 of new investors. But we normally cannot, which is kind of annoying, to be frank. And also in our experience, at least, those deals tend to be the ones I need to be most careful with in terms of communications, right?
Mm.
I've had deals where I can't say I'm doing them, right? I can say a year after that we're an investor, kind of without really mentioning when we got in and whatnot. It is really annoying as a syndicate at times, those kind of things. I don't know if you feel it as well, but we get a couple of those every now and then.
Yeah, actually, earlier today, Sasha and I were still rehashing some reconciliation issues that we had from getting cut down on a specific investment, and that's super painful, right? When you have almost everybody in your syndicate saying, "Hey, I want to invest in this," and then you have to make a hard call about who invested first versus who's your biggest fan. And so that's never an easy decision to make, but it also means you're doing something right.
Yeah.
So. But even if you can't get into the deal at hand, that means you have probably someone knocking on your door for the next one. So yeah, it's kind of the delicate dance you have to do.
Yeah, it's true.
I try to add one more, and that is also who's first to commit. You are trying to raise your syndicate as in who moves first gets the deal,
Yeah.
right? So don't let that email lay in the inbox for a long time. If it's hot, you have to hit it, right? It has to go fast. And that's how it is. Normally, the hottest ones don't really get sent out because it's already closed with the most active ones, right? But yeah, I think it's about trying to pivot, or not, maybe not pivot, it's not the right word, but try to nudge your community to act in a certain way. In the most interesting one, yeah.
We've had an instance where two instances actually where we could actually use it to our benefit in a weird way. So one example was a very well-known fund that I cannot disclose. I was fighting for an allocation for, I think, almost 2 years, and the fact that we could design the syndicate was actually super enticing to them. In their specific case, the GPs have like this big view of having like more women in venture, more women investing in venture, blah blah. And so honestly, what unlocked it for me was saying, well, what if I only invite my female investors, like, and I try to make a female-led SPV, and that actually unlocked a higher allocation for us, which is kind of cool, right? So it's not
Nice.
only challenges. Sometimes you can do stuff like that, which is kind of cool, right?
That means she has a very big syndicate since you can do such a carve out. That's impressive.
Yeah, we have a couple a couple of active investors. We have 270 active investors right now, so it's
Wow.
not a bad number. Yeah.
Well, okay. And then how are you managing just the reach out to investors in a practical sense? Like any tech tools or other ways?
I don't like my answer, so how
I,
should I?
I can do mine then. I write individual email to every single investor, and it's painful, but it just has a much better response. I try to do group, I try to do newsletter, but honestly, I don't think it works. I think a thoughtful personal email works, and it's not scalable, I know, but that's how I like to do it.
Yeah, I think we're all pretty aligned here. We do have a WhatsApp group, right, where everybody has access to everybody else's name. Most people know who each other are. We do send out messages to the main WhatsApp group, which is about 70 people at the moment. But at the end of the day, personal individual communication is above all. And I think that's the most effective, that's the most interesting, right? And that's why kind of what we're doing isn't scalable, but it works. And so I think it depends on the type of syndicate that you want to build. If you want 10,000 members, you can't talk to all of them. You can't write these individual emails. But, you know,
Can I ask you, David, like, so if you post in a WhatsApp group and there's somebody saying, oh, I know that founder, he's a real beehole and he cheated me for something in the past. How do you think that deal's gonna fly in that, in that community?
not well, not well. That is for sure. Luckily, we haven't had this happen yet. I'm sure there'll be a negative response to something, but in general, I think that luckily our community, we all have similar values, and if someone really had a strong opinion, they would probably broach it with us individually. But again, in the future, I guess we run the risk, but that's transparency, just like you, right? We're super transparent with our communication, with what we're doing, and I guess opening the door to individuals having the ability to say whatever they want to say does have a risk. But we also gatekeep who we let in the group. So we want to make sure that everyone's kind of in line with our values.
Got it. Okay. And what about David Silva? You've got quite a cool way with like Airtable, a CRM system.
Yeah,
Any insights you can share from that, or was that the bit you did
Yeah,
there?
share, David.
it was all built by me, so it was a lot of hours, too many hours poured in. Like literally, I have like these dashboards and everything. We built it all on Airtable. Now the way we manage it is quite straightforward. So we have this Substack page, private Substack page. It's just an easy way to have like a system of record where people can see stuff. I don't really see the value of like these. There's a lot of softwares out there selling like pipeline solutions, deal review solutions, blah, blah. I think it's all great. It's all cool. It's just not worth the money. We don't make money out of our syndicate. I should have mentioned that. Like our business model is designed to be break even. Like that's our objective, is that like it's break even and we make a shit ton of money in 10 years when our investments pan out. Like that's our plan. So for us, it made no sense to have like paid tools, right? So we do have paid tools, but it's because we had to in a way. But like we run it through Substack. That's kind of a system of record. It's where people can go and see what's in our pipeline, what's our past deals and whatnot. Whenever we want to raise for an SPV, for a feeder, as we call them, or whenever we're hosting like a pitch session with a potential investee, that's how we communicate. So that's not personalized. That's mass. We keep our emails like super short and simple. Like I sent one today, literally, hey, we're looking at this fund, hosted a pitch session last week. Here's the recording. Tell us if you're interested. If not, do nothing. It's like really simple. And then they go into this place where, they have that information. So we have kind of an overview of the deal, some kind of, nothing fancy, right? Early stage, geo, like stuff like that. We have the recording, we have a data room. We run the data rooms via DocSend. Super expensive, but it's the best solution we could find to keep like data safe, to be frank. And then we run like our commitment process via Airtable. So people can soft commit and hard commit. We separate soft commit and hard commit. There's a lot of cons to it, to be frank, but also some pros. And then same as Oliver and David, like whenever I really feel a deal is going to pick up and I'm super excited, then I'll do like those direct emails, those WhatsApps, those honestly like audio messages are the best. Like I just send an audio to John. Hey John, this is super cool. I think you'll like it. I'm excited for X reason. Check it out. Tell me what you think. Right. And that is what converts the best. It's also super time consuming. Right. But yeah, so we do kind of this hybrid approach. I think what I obsess about is spending the least amount of time on my syndicate as possible, which is weird to say. But it is just the economics of it require that, to be frank. You're not gonna make a lot of money running a syndicate. Maybe the US model of having 10,000 members and then charging 5% of that, $100 per month, so you can say you don't charge fees, works. I don't know, but I know there's people doing it, so it might work. I don't know. Yeah.
Can I ask you, David, how do you run your syndicate commercially? Do you take anything up front, or you only like do free, or what do you do?
No, so most of our deals are LP deals, right? I think it's not justified. This is my view. I don't think it makes sense to charge a management fee on LP deals. having that said, there's a lot of work that goes into it, and I think like I have reconsidered this statement many times in my life because right now I am managing communication of quarterly reports for over 25 funds, and I'm being paid zero, right? So there is a point at which you start rethinking that, but that's been our policy so far. And then we charge a setup fee, which helps us pay the costs that we have, namely Mara, but other stuff as well. And then we charge carry, right? So really, where we want to make money is on the carry side, which means it's a cost center, right?
Yeah. What about you, Speese?
Yeah, similar, right? We charge the Mara fees through, and then a small percentage on top of that to kind of handle some of our operating expenses, right? And we also do events for our members and cover some of those things. And then we charge a carry, right? Like I think at the end of the day, this is the most interesting part of running a syndicate is that you have deal by deal carry. And especially with low ticket amounts, every investor, all of our investors have never questioned it. They say, hey, you guys have earned this. We're happy to pay, a small fee on top of the cost as well, because, at the end of the day, all they have to do is say yes or no. And so that's like kind of the goal of our syndicate is to basically put something on a silver platter and you have all the information. If it's interesting to you, which we think it should be at least somewhat compelling, you can make a decision very quickly, right? So we're giving you access at low amounts very easily.
Yeah. As I can honestly say, I get pushback once in a while, but that's mostly when I'm repurposing the founder's own network, right? They're like, and if they come in with big tickets, it can sometimes be a little dicey, but I've kept it really square and direct. I will tell them exactly what is Mara's fee, what is my fee. I charge like a flat 5%, but I do say I will repay it as the first amount. So my hurdle rate is after they get their feedback. I don't want to make money. I just want to cover costs. That's basically what I do. And the smaller deals, I even put more in to cover my investment. And then, of course, I think like everybody else, we all invest in our own deals. That's like the premises of what you're doing.
Yep.
And then larger deals, I do my investment and I take like a small fee out to cover office expenses. But that's it. It's not a money-making business upfront. I don't want to run this paid subscription part. And then I charge 20% carry. And I think there's also a lot of opinions about that. Some take 5, some take 10, but I do early stage stuff. That's so much risk and it's so long time. So for it to be worth my while, I just say I do 20 flat, and I haven't compromised on that yet.
No.
Just for me to share openly what I do.
No.
It is a jungle and there's so many opinions, but yeah. So that's just how I do it.
I think very, very aligned, Oliver. Also, David, very aligned. I think the one nuance I'd add, Oliver, to your point of the founders network, right? So for us, it's mostly the GPs network. That's where I say, hey, my setup fee covers costs. Like, there's no way around it. Simple, right? I'm not going to subsidize your network, right? And that's just being honest. Yeah. Then what I will say is, so for an LP deal, we typically charge 5% carry. And what I tell them, I literally have an email where I write this, so they have it in writing, right? Just say, hey, to your network, carry can be anywhere from 0 to 5, inclusive. I don't care. Just tell me the number, and I'll make it happen. And I leave it up to them. And sometimes these feeders are really perceived as value adding to the investee, whether that's a fund or a startup. And they will actually give you special terms. So we have seen that happen, and that's where, honestly, those are the best deals because that's where everyone kind of gains a bit, right? You can't.
Yeah, you will get a carry discount, and then you pass it on to the investee and investors, and then everybody's happy, right?
I have the LP deals where my investors are getting better terms than a normal LP. That's crazy when you think about it. So they're getting less when you stack everything. They're getting less management fee. They're getting less setup fee, if any, and they're getting less carry. And like that is when I really feel like now this is where I justify my existence, right? This is where I'm being really additive. And that I think that's possible, not always, but that's possible, and people should do it. There's a question here on the chat that I want to address because I think it's important. So we have personally done deals as small as 100,000, and the biggest deal we've ever made is 3 million. Our average deal is 500,000. So that gives you an idea of scale, and our individual investors are investing on average 15 to 20 per deal. It varies a lot, right? But that's roughly what the numbers tell.
Cool. Thanks for that question, Leo. Yeah, how about for you guys?
Yeah, I also have done 3 million, but that's in Danish kroner. So it's 400k euros. I basically going to sign it here today or tomorrow. It's the biggest one I've done so far. But again, I'm also doing pre-seed and seed, meaning if I take 10% of the round as a co-investor, that's really, really good. I haven't done any late stage. I haven't done any funds. So for me to deploy 500k into a seed round, I think I'm quite proud about that. But it doesn't sound like a lot in the big game at all.
It's a vanity metric, right?
Yeah, but it means a lot to the founders you talk to, what kind of size of deals you've done. But I also tell them, I actually really don't care how big a SPV I do, because I don't make any money up front on it, right? I just want to be part of the best possible deals and help founders. And if it's not this one, maybe it will be the next round I can put in a big allocation. So yeah.
Yeah, on my side, I mean, I think the economics of doing deals under 100k don't make as much sense as the fees, become a much larger percentage of the actual amount invested, right? And so our minimum ticket goal is 100,000, and luckily for all the opportunities we've decided to invest in, we've hit that. We've recently done a couple later stage deals, one of which now we're closing with Sasha this or next week. That'll be about 800,000. And so again, I think later stage deals are much easier for individuals to write larger checks, because it's a real business with EBITDA usually.
It becomes like a no-brainer. They want to put money in OpenAI and Anthropic. Yes, please. The other one is just a completely different risk. Yeah.
Right. And so that's why I think that we keep our minimums low for the lower or for the earlier stage tickets, which makes a lot of sense, right? Because unless you are really super well connected to the company, making large bets on early stage deals, unless you have endless amounts of capital, doesn't make sense.
How do you guys you guys are both doing mostly direct deals, which I'm not, right? How do you guys manage your time? So if you were a VC running a traditional fund, LPs would ask you like, how many deals is each partner managing at one given time, right? It's basically the same question. How do you guys think about that and manage like how many investee relations can you have open at the same time?
As I've tried to have like 3 or 4 at the same time, and it kind of blows up in your face because you end up kind of hitting the same investor with the same stuff. And I really never want to put them in a position where they have to decide either or. That really sucks, right? Yeah. So I kind of want to do one deal at a time. But sometimes those deals, and I come in super early. I can be the first person that the founder talks to, and I will help him raise his round and work really closely with him. And that relationship, for example, this deal I just closed now, started in October last year. And I'm closing it now because I'm part of the tail. Obviously, I've done deals in between, but I kind of want to have one and then kind of put a lid on that before I move on to the next one. But maybe 1 to 2 maximum, and otherwise it's not good. For me, at least.
I agree with you, Oliver. Having 1 to 2 maximum at the same time is ideal, but that's typically not what happens, right? Usually exciting things come up, and there's a short period of time where you have the ability to make a decision or not. And we're, as founders of our syndicate, we are also personally investing into these companies as well. So we have to make this decision personally. Hey, can I invest in 2, 3, 4 deals at the same time? And that's a really hard call to make. So yeah, I would say we're constantly evaluating multiple deals at the same time, and you kind of have to pick what would make sense for the syndicate as well. Who likes what, and that goes back to how well do you know your members.
So that's a good question, because that one I've spent a lot of energy on. Like, what is it? And I know it's very individual from syndicate to syndicate, but what is the right answer for you? Because you could, in one hand, have one that you would perceive as the best possible deal, and you have another one you think fits better with your syndicate. Which one will you choose?
You live and die by the quality of your investments, right? That's what all of my mentors have taught me. So if I'm ever in doubt, I follow my gut. At the end of the day, and I think this kind of is true for all syndicates. The syndicate
Yeah.
exists to kind of co-invest with whoever's running it, right? It tends to be like that. So if I follow my gut, I believe I'm servicing everyone better. Now, Oliver, I've had horrible experiences of not being able to close deals that I truly believed in, and
Oh, I have a few
those are
stories
the
of that.
ones that really hurt, right? And I do have deals that I've made that I compare to the ones I haven't been able to get to minimum ticket, right? That I just look at them, I'm like, Jesus Christ, this makes no sense. This deal would be way better. But to answer your question directly, if faced with that decision, I follow my gut. I don't care. And if that means I can't pull off the deal, I can't pull off the deal. I still
Yeah.
track it. I'm aware of which deals I have not made, and I track them, and I know my track record with executed deals and then deals that I tried to execute, and I keep a paper trail because this is really important, by the way. I keep a paper trail of I actually tried to raise this deal. This is what I was saying at that time, and this is what happened 2 years later, right?
Mm.
For me, that
So
is
your anti-portfolio and share it with your syndicate and say, see, you should have done
I
it.
don't do that. I should do that. I actually don't tell them. I don't tell them, see this deal I share with you? Go fuck yourself. No, I don't do that.
No,
I don't do that. I don't do that.
Yeah, I guess you got to
what
be a
about you,
bit
Speece?
delicate there. Um,
But it's
you
a
know, the
good point,
hard,
though. It's a good
yeah,
point, Oliver. We should.
Yeah, yeah,
the hardest deal that we've done so far was, again, David, as you mentioned. I thought it was the absolute biggest no-brainer. You know, very early access, no product, no traction, to absolute all-star founders coming from organizations that are, top-notch in the world. One of them had already sold a business within 2 years. I thought it was the biggest no-brainer on the early stage front possible, but it was the absolute hardest 100,000 that we raised by far. And maybe that's our fault for lack of education, but um, luckily we haven't had to say to a founder or to a company, "Hi guys, sorry we didn't make it." We were super close, and it's a terrible feeling, but yeah, it's I mean, we went with our gut on that one too, for sure. And it was, the amount of money that we would make, unless it becomes $1 billion company, probably wasn't worth it. Um,
yeah.
but
But
let's
I
see.
think the thing is when you invest super early stage, right? You are basically betting on the founder profiles.
Yeah,
And a syndicate tends to want to have stronger signals than just an awesome founder profile. That's at least what I found out when I do pre-seed. I can barely scrape enough
yeah,
together, right? I end up putting in the rest myself, and I don't mind doing it. As like if I only need a little bit more or half of it, I'll put it in myself because I actually do believe in the company. Otherwise, I wouldn't do the investment.
right.
And I can share that I had the deal fail as well, where I had a unicorn founder coming to Europe building the same business that they did a unicorn in US. Tier one lead in pre-seed and then preempted in the seed. No subscription whatsoever. I couldn't convince my syndicate to do it because they didn't have any traction.
Yeah.
But they had a lot of hidden strong signals.
Yeah.
And I had to go back to the founder and say, but again, I have a very good communication with the founder, very on top and giving updates on the way. And ultimately, I said, sorry, I didn't get any commits on it, and it wasn't a fit for my syndicate. And I honestly don't think there's anything wrong with that as long as you're being communicative and upfront with the founders. Then you give it your best. But that's going to sting, and that's going to give you a crappy NPS in that founder at least. But yeah, that's how it is.
Yeah. Well,
Yeah.
You mentioned something. That's why many people graduate from running a syndicate to raising a fund, right? Is that inability to make these controversial bets, which for us are not, right? But we just went around the table, so to speak, right? And they exist where we believe it's a no-brainer and no one around us believes. So there's something there, right? Now that leads me to the one thing that keeps me up at night, which is especially with early stage investing. And this is one of the main reasons, by the way, we run an LP mostly strategy is like, I don't believe most angels understand portfolio strategy. And I get really worried with this. Like when I look at my network and what they're investing in and not investing, I'm like, dude, like statistically speaking, a portfolio that has most failures is the one that delivers most results. So that means that statistically speaking, if I deliver you outstanding results, it's because most of my deals fail, right? This is just statistics speaking. This is early stage venture in Europe and the US, right? And so if you're a member of a syndicate and you're investing in one deal every 2 years, statistically speaking, you're going to lose money, right? And that keeps me up at night. That really, really fucking bothers me. And I'm always trying to communicate that message to my investors, and it's incredibly hard. But it's also why when we were talking about it just before, I tend to give preference to people who reinvest, right? Because I feel like I'm servicing them in a way, right? In the sense that I'm helping them not lose money. I'm helping them avoid the dispersion of venture. I don't know. How do you guys deal with that? How do you communicate with your investors around that? Sorry.
I think
I disclose to. Oh, yeah, go ahead, David. Sorry.
Oh, sorry, Oliver, for cutting and jumping. I think the biggest maybe point to make here is that you're investing alongside them, right? I think that's extremely important. It would be a totally different dynamic if you are just, pushing out 3 deals a week and saying, hey, here's an opportunity. I'm not standing behind it, right? So if we're putting our own capital behind these deals as well, I think it kind of levels the playing field with how you and the rest of the syndicate are sitting. Obviously, there's education about risk. Whenever we put out an investment memo to our members about an early stage deal, we're saying this can go to zero. This is likely to go to zero. We believe this could go to zero, but there are these other indicators that are super interesting, like the quality of the founder, a little bit of traction, some of these things that we like, and as within our experience, we think it's worth taking the risk for an opportunity like this. So I think like it's education plus, if you're on the same playing field on the investor side, making a commitment that really helps quite a bit.
I echo David, and on top of that, I also try to learn them about portfolio. While I'm saying, because many ask me what kind of ticket size should I do and how many investments. I said, ideally, you need to build a portfolio of such, right? And you need to look at how much money are you willing to lose or invest, and you have to divide that into a certain amount of tickets, right? And that's also where you say, yes, you need to build a portfolio and you might have a concentration risk, but actually SPVs enables opportunities to build a portfolio with smaller investments. So I get what you say, David, and I also agree what David is saying. We're co-investing, but we also create the opportunity to build a portfolio. Otherwise, it's impossible as an angel investor today to build a portfolio. You need to put in, let's say, 25 to 50k euro tickets, right? But if you want to do that on top of your whole portfolio, where it should only be like 5% of your wealth, like you need pretty big piggy bank to do angel tickets and have a big enough diversified portfolio. So SPVs is the way if you want to do it direct and be closer to the action in the founder. And the simple hack is just investing into a fund, obviously, right? But then there's like this added layer and distance to it. But I normally recommend people to, if they really want to start seriously angel investing, it is start investing in a fund, learn how to invest with the fund or with a syndicate, and then you can do it on top of that, right? So, but there's many ways to do it. That's just my recommendation. So it's a combination, not either or.
Mm.
Yep, I agree.
None of this is investment advice.
Yeah, it's just how I do it.
Yes, exactly.
All right, guys, I think we're almost at the end. I didn't see any more questions pop up in the chat, but I'll give people 2 minutes if anyone wants to fire away. But otherwise, I think thanks for
question. I think this is from a founder. How can solo founders approach angel investors? David, Oliver, do you guys have any tips? I don't do a lot of startup investing these days. I do mostly fund investing. How would you advise a solo founder approaches angels? I guess the question is around angels who want to do solo founders. I don't know. Is this a thing? So I know on Fundland, like solo GPs is a topic. Some people hate it, some people love it. Do you also see that on direct startup investing land? Like people care about a solo founder?
I think historically solo founders are not very popular. I'm honestly, I have some adverse selection towards it, but if it's a truly strong solo founder, that's let's just say have done multiple exits in the field, is doing it again, I'm not too worried, right? Because he knows people, he can build it, he's done it before. But if it's somebody that doesn't have that pedigree, I would advise the founder to find a co-founder and then build a team, share risk. Because sometimes it's actually just convincing one person for your vision is the first step to be able to raise money. So it actually looks as a weak signal or red flag if you're not able to convince at least a co-founder, right?
I think that's a
Yeah, I tend to agree. I think it's all about the profile, right? And if you've shown you've done this before, because everybody knows in the entrepreneurial world how difficult it is to build a company, and if you don't have support to do that, it's it's extremely difficult to carry the load by yourself. So I think that's one item that if I had to approach an angel or a group of angels, I would ask what they think, right? I would ask for advice. I would ask, is there anybody else that you know in your network that would be, interested in joining a company like this? Because, fundraising is about building a relationship. It's not about asking for money directly. And so I would say that's probably your first question to the angel investor, saying, hi, I'd actually love some advice. Maybe we can develop this relationship, instead of saying, hi, I would like 100,000 euros, please. So I would say, maybe going out to these angel investors and seeing what they think. Start the conversation there. That's probably what I would recommend.
Maybe, Sasha, that's your next webinar on how can founders approach angels and stuff like that. I feel we could talk for hours on that. So it's a bit of a rabbit hole.
Yeah, sure. We actually did a webinar a few weeks ago with a solo GP, and he was sort of championing that position. And we were talking, because I'm a solo founder as well, and we flipped it and saying that there's actually less team risk when you have a solo solo founder, solo GP relationship, because one of the biggest reasons why startups fail so funds is like teams fall out. So sort of like an edge case to dispute you guys. Yeah, maybe there's less team risk when you're being on your own, but for sure, David, I get it.
You could also argue it's 100% team risk on one person. So it's you can do both.
Diversified team risk or
this is a very conflicting
team split risk.
Yeah, but unless your co-founder is Claude, right? That might be a valid point in day and age, right?
Fair enough.
There's one more question here. Let's have a look.
I think it's the same.
Oh, it's just a comment. Thank you, Alina. Yeah, I think that's it from questions, guys. Yeah, thanks so much for dialing in, and thanks for the panelists. Any final remarks before we drop off?
I have one on this topic of solo founders. Again, as I said, it's not necessarily an investor mindset, but I am a founder of my own company. And I must say that having a co-founder that has my back is probably one of the best things that helps me sleep at night. So I'm not saying it from an investment perspective, but I think finding a co-founder is one of the biggest hacks to have a bit more work-life balance. So if you can, I strongly advise you towards it, regardless of investments, right? Regardless of attracting angel investing.
Yeah, I'm echoing David 100%, right? Xaura is not just me, there's 3 other partners involved, and depending on the deal, depending on what we're doing, right, other people pick up the slack, and this is not what we're doing full time for our careers. And so it's extremely important to have people that you trust and people that you work well together with, and so I think it makes the entire process a lot less lonely and a lot more enjoyable. And you sleep better.
Yeah, I'm doing everything alone. I'm just working really close with founders and other GPs. That's like I feel that's my colleagues, and also an open invitation for anybody part of this webinar. If you want to learn what I do or co-invest, or assume it's the same with the rest of the guys, please feel free to reach out. Happy to chat, happy to share. I don't feel it's a secret. I think it's about empowering people to do it. So you're more than welcome.
Likewise.
Yeah. All right, stuff, guys. Thanks everyone for dialing in, and have a good evening. See you on the next episode.
Bye, everyone. Thank you. Bye.
Have a good evening. See you.
Bye-bye.
Bye.